Allow state you have actually currently got an excellent quantity of cash money to invest. With the global economic crisis building, possibilities are accumulating. Nevertheless, things might worsen in this bearishness provided we're only 9 months in. Just how would certainly you spend it? 2022 has actually until now been a dreadful year for both supplies as well as bonds. Realty has actually outmatched stocks by over 27%. Yet, even Realty is beginning to discolor as home loan prices surge greater. U.S. Treasury bond performance versus supplies exactly how to spend cash in this bear market. No place to conceal in 2022. How I would certainly spend $250,000 cash money today. After acquiring bonds, I've been collecting a larger than normal cash money hoard this year. Typically, I'll have in between $50, $100, in my primary bank account. Yet up until now, I've gathered over $250, partially as a result of a $122, personal property investment windfall earlier this year. Along with collecting cash money, I have actually additionally been dollar cost averaging in the S&P 500 heading down. I have actually additionally been dollar cost averaging in Sunbelt property on the way up. But these acquisitions are generally only in $1, $5 increments. Since my cash balance is larger than typical, this is my idea exercise on how to release it. If you have less than $250, that's fine also. I share the percentages of where I will certainly allocate my cash. History info to comprehend our investment refine. I'm 45 and my better half is 42. Our kids are 5.5 and 2.5. We consider ourselves moderately traditional capitalists because we haven't had routine day work revenue considering that 2012 for me and also 2015 for my wife. We are afraid needing to go back to work. Not because of job itself, but due to the fact that we fear shedding our flexibility with kids. Therefore, we are unwilling to take way too much investment risk. Although we do not have day work, we do generate enough easy financial investment revenue to cover our living expenses. This is our definition of financial self-reliance. We additionally generate online revenue, which we normally reinvest to generate even more easy revenue. As a result, our cash money heap will certainly continue to construct if we do not spend or spend the cash. Forever goals. We both want to remain jobless at the very least until our youngest is eligible for kindergarten full-time in 2025. This way, we can spend more time with both youngsters. After 2025, we might find day tasks or I could focus on coming to be a specialist writer. I appreciate being an author, but it pays poorly. We're also looking to upgrade our home in 1 to 3 years. That said, my wife as well as kids would certainly be happy living in our existing house for the following 10 years. Getting one more home is not a priority. Our children's academic expenditures are on track after we superfunded 2 529 plans. We additionally live insurance policy and also estate planning set up. Therefore, there's no major big ticket items showing up. Right here's just how we would certainly invest $250. 000 money in today's bearishness. This is what we're doing with our own cash money and not financial investment advice for you. Please always do your own due diligence prior to making any kind of financial investment. Your financial investment choices are your own alone. 1. Treasury bonds 60% of cash money holding. Just concerning 5% of our net worth is in bonds. Specific muni bonds we intend to hold until maturation. Our target yearly net worth development rate is between 5% to 10% a year, relying on economic problems. Consequently, having the ability to earn approximately to 4.45% on a 3-year treasury bond is enticing. At the same time, I'm constantly looking for a nicer home due to the fact that I believe staying in a terrific residence is the very best way to enjoy our wealth. Think of it all times we invest in your home nowadays. There is no delight or energy derived from possessing stocks, which is one of the reasons I prefer purchasing property over supplies. Nevertheless, return stocks do provide 100% easy revenue. As soon as the 10-year bond return reached about 4%, I decided to acquire the following treasury bonds completing $142, $872.91, $101, $736.74, 000 well worth of 9-month treasury expenses yielding 4.2%, $10, $766.89 worth of 1-year treasury bills producing 4.3%, $15, $501.33 worth of 3-year treasury expenses yielding 4.45%, $14, $867.95 well worth of 2-year treasury expenses producing 4.38%. How I de-invest $250, 000 cash in today's bearish market acquiring treasury bonds. Although locking in a 4.2% to 4.45% return won't make us rich, it will certainly offer us satisfaction. We also currently feel abundant, so making more cash will not make us feel richer. Our focus gets on optimizing our flexibility and also time. Right here's a tutorial on exactly how to purchase treasury bonds, which includes some purchasing techniques to think about. I will get more treasuries if the 10-year reaches 4% once again, as you can purchase an unrestricted amount. Unlike I-bonds, the staying 39.9% of our money will certainly be bought threat assets. 2. Stocks, 10% of cash holdings. Roughly 25% of our net worth remains in stocks. It was about 30% at the beginning of the year. Many thanks bearish market. The variety has actually hovered between 20%, 30% since I left operate in 2012. Because I began working in equities in 1999. I've done my best to branch out far from stocks and also right into hard possessions. My career and also pay were already leveraged to the stock exchange. And also I saw numerous excellent ton of money made as well as lost during my time in the industry. When I left work, I proceeded my choice of investing mostly in Realty. However, we front-loaded our supply purchases in 2022 through our youngsters Roth, IRAs, custodial accounts, SEP, IRAs, as well as 529 strategies. For over 23 years, we have actually constantly front-loaded our tax-advantaged accounts at the start of the year to obtain them out of the way. The majority of the moment it works out. A few of the moment it does not. That's market timing for you. Yet we do get to front-load our tax-advantaged investments once again in 2023, which will verify to be better timing if the S&P 500 remains dispirited. In addition to maxing out our tax-advantaged accounts, we've been regular contributors to our taxed on the internet brokerage accounts. Besides, in order to retire early, you need a much bigger taxable financial investment portfolio to live off its income. No rush to buy stocks. If the Fed demands elevating the Fed funds rate to 4.5% plus, then the S&P 500 could quickly decline listed below 3,500. And if earnings begin obtaining reduced by 10%, after that the S&P 500 might conveniently decline to 3,200 based on the average historic P or E multiple. As a result, I'm only nibbling at these levels. The Fed says it intends to hike with the end of 2022 as well as reassess. With investors able to get an assured 4% plus return in treasuries, it's hard to see the S&P 500 rebounding strongly until the Fed confesses rising cost of living has actually come to a head. Offered the circumstance, I'm simply purchasing in $1, $0.005, 000 tranches after every 1% 2% decrease through the end of the year. In the chart above, you can see one purchase of $2.543 well worth of IVV on 9 divided by 27 divided by 22. If the S&P 500 goes below 3,500 500. I will certainly raise my financial investment size to $3. 0.0005. 0.000 a true. If I was in my 20 seconds and 30 seconds, I would certainly assign 60% of my money to buying stocks rather. 30% would certainly go to online property, and the rest to treasuries and education. 3. Equity capital, Endeavor financial debt, 20% of cash money holding. I enjoy purchasing private funds because they are long-term investments without any daily price updates. Because of this, these investments create little stress and anxiety as well as are very easy to ignore. I have actually currently made capital commitments to a pair equity capital funds from Kleiner Perkins. I also made a resources commitment to Structural Resources, a venture financial obligation fund. As a result, I will certainly just maintain adding to these funds whenever there are resources telephone calls. I expect venture financial debt to outperform equity capital equity throughout this time of greater prices. Venture debt is a lower risk means to create returns secretive firms. The greatest drawback to buying these funds is higher charges. We're talking 1 to 3% of possessions and also 20 to 30% of earnings. 4. Property 10% of cash holding. Realty is my favorite asset course to build wealth. It offers sanctuary, produces earnings, and also is less volatile. Unlike with some stocks, realty values just do not decline by large quantities overnight because of some tiny profits miss out on. Realty make up concerning 50% of our total assets. Whatever occurs to the value of our present for life home we purchased in 2020. I'm thankful it has been able to maintain my family safe and enjoyed during the pandemic. When it pertains to buying a primary house, it's way of life initially. Financial investment returns a remote secondly. All the memories, photos, videos, and milestones our youngsters have achieved in our present house are invaluable. Also, when I was suffering from property FOMO previously in the year, our kids stated they favor our much cheaper residence. As a property-obsessed daddy, that suggested a whole lot. Their reaction showed me the rate of a home isn't always the main thing that makes it nicer. Your house design and its knowledge matters a lot as well. Given my partner as well as youngsters are happy in our home, I shouldn't